Okay team, Apex Trades back with another tutorial. This one's more, well, still following along with our educational series, and this one's going to be on the VRVP, visible range volume profile, why it's important, why we use it. So without further ado, we're just going to jump straight in. So to start off, head over to your indicator box section, and then you want to look for the visible range volume profile. This isn't a community-based indicator, so it's kind of one of the stock ones. Just type in VRVP and it will come up with this one. Save it. I always save the ones I use into my favorites. Once you go and add that in, you'll see yours will probably come over on the right hand side, and it will probably be yellow and blue. We can make some changes, and I'll just go over what they are so you can see. On the input section, you want the rows to be 24. You want to leave it at ticks per row. If it's not on ticks per row, it may be on number of rows, but change that to ticks per row. And then your area, you want it to be at 70. And for the style, I place mine over to the left hand side because I don't want it to convolute the price action side here. I change the color of mine to be in synchronicity with the actual bars, so I want to know which areas are sells and which of the areas are buys. So reds being sells and green being buys. Labels on the price scale values, and I don't think we change anything on the visibility, so you can leave that standard. Okay, so what this is actually showing, and the reason why this is so important, is where the amount of traded volume is being at different price levels. So what you want to do first is just map out where the peaks are. Now what I always tend to do, you may have seen these on some of the trading journal videos that I've uploaded, but if you go to your horizontal lines here and you just draw out your peaks, there's one. And let's just scoot this out the way. There's another one. I'm going to try and get these as close to the peaks as possible because they do matter. Obviously we've got the big one here. Now what we're doing is we're only looking at the visible range, and we're looking at the 1 hour time frame. So this is only going to show the visible range of whatever's in your display right now. And we just keep on going with these. We're just looking at the peaks. Just trying to get that as close as I can out there. And you do want to be as accurate as you possibly can here. Okay, and then we go here, the final one. You could argue that that's also one. And then the final peak. We're not going to be too interested in this area up here for now. And now we can go ahead and get rid of that, because what this is going to show us is where the order blocks are. So where have the big orders been? And in terms of kind of price action, figuring stuff out is looking for good levels of entry, and then where the next potential consolidation might be, or breakout might go to in order to get out. So we're going to do a review and just see how the lines that we've drawn from the VRVP are respected. Even without having to be a super expert at your, what would you call it now, your support and resistance. So what you're really looking at is areas where we are concentrating. So you can see here, just on these little peaks alone, we're just kind of peeking through. We've come up, we've wicked here, we've got a couple of points here where the body's just below that next line of consolidation. And you can see these are the ranges where you want to be maybe entering and exiting. So you can see, we hit this range here, we came down, hit that range again. Now on the 1 hour, these aren't massive moves, probably like a 200-point move, but still decent enough in terms of being able to think about where you want to get in and get out. We tend to consolidate, or we tend to see the consolidation around these areas. We broke through it here. Where did we fall? Right to the next consolidated point. Came back out, broke up, wicked just above that consolidated point. And it's just a fantastic way of just using the VRVP just to figure out things just by putting on some lines. where the peaks are. Broke through it here. Where did we come down to? This one was a much bigger move, so the 19,800 to the 19,447. So just over a 300-point move. Again, if you're thinking here, okay, well now we're just, whenever you're thinking about kind of consolidated areas or order blocks, you're always looking at how it's being respected. And look, we've had a breakdown. We came back up, couldn't break through candle number 1, second hour, couldn't break through candle number 3, tried to break up again, couldn't break through. So that's three or 4 points there of failed rejection on this order block here. So now what do we do? Well, now you're thinking to yourself, okay, potential move to the downside again. And look at this, this not only, you may have got out here, depends on how, if you had a stop loss just here and you want to let it ride, well, what a move that would have been. You'd have gone from 19,467 and then down to the next VPVR, which it did tag. So we wicked it, so we got past it. So if you had your take profit at this point, you would have got the full realization of that take profit. Down to 18,737. So going from 480 down to 18,700. It's a very, very bit decent move. Again here we wick the next line of consolidation. Get a bit of a break to the upside. No real consolidation here. So this is, you want to be catching these trades that either go to the upside or to the downside. Now again, if you think, okay, we've had a big sell off, we're expecting a bounce. Well, even if you had a long order here, and you had a fairly tight stop loss just below the next order block, well, you're not going to get stopped out for much, are you? You're showing respect to the long side, but ultimately you're cautious that if it does continue down, you're just going to take a small loss. So it's just being sensible on how you trade. But time and time again, you don't have to be an expert. We're just trying to break this down into simplistic terms. We're using historical data to figure out where the consolidation occurs. Now, you don't want to trade the consolidation areas. You want to trade the breakout of those consolidation areas. So you want to trade, you're looking here to think to maybe figure out which way the move's going to go. Now, when you're seeing such a big move like this, I mean, I'll tell you what, this isn't anything to provide indication on additional indicators. But if I just look at the MFI, and we're going to cover this in another tutorial, money flow index, even without looking at this, I'm going to suggest that this was a very oversold position, and you would naturally expect some sort of a retracement on that, and you can clearly see it. We came down, we had these big sell-offs, and what did we do? We tagged right at the bottom of the money flow index. This naturally, got to be careful what I say with my words here, but naturally we assume a retracement once we've hit this point. So I'm just going to get rid of that because I don't want this to be on the MFI. But now you're thinking, okay, we're consolidating, we're kind of letting things catch up a bit, but now we expect at some point a nice move to the upside. So what happened? That we just got that move to the upside. Another little bit of consolidation around this peak order block area. Next one, again, more consolidation. Big move to the upside, consolidation. It's just so simplistic when you break it down like this. It's really easy to see just by using the VR VP of removing the noise. I mean, if we take these lines off, it's difficult to see sometimes unless you've really got a keen eye on levels. Just by looking at that, I mean, you can eyeball where those key levels are. But just when you put your lines on like that, I mean, it becomes a lot more straightforward to review. As I say, between the lines, you're seeing your moves. On the lines, you're seeing your consolidation. Big moves on between the lines, consolidating on the lines. We see this here. It's just time and time again. Get this one under your fingertips. Get your fingerprints all over it. Make sure you're comfortable with using the VR VP because it's a really, really solid tool for in your weapons. So perfect one example here again. We had a nice break up to the upside. We came on this VPVR line here for where your odds block is. Slightly overpeaked it. That's fine. None of these are going to be absolutely perfect lines. It's down to you how close you can get it to where your VR VP is. But ultimately, it's close enough, and with decent risk management, you're not going to get stopped out. And then you had another lovely move to the downside, breaking through 1, 2, 3, 4, 5 VPR lines. So I hope this one was a relatively short one, but it's nonetheless just as important to kind of understand where are we right now. Again, up here, this is because the lines are quite close here. That means there's a lot of traded volume around this, and we know around that 20k, 2200 has been a very long-term sticky spot. We know the 19.2 is another really sticky spot around that 19k2 area. You can see all of this consolidation is clear. Just at time of recording, if we just scoot this over to where we are now, let's see. We just, we've broken out. We had this consolidation here. We've broken out a little bit. Are we going to retest this? I don't think we are. I think we're probably going to break down after this line and then move down further. Maybe as low as the 18,750, somewhere around here. I think that's the next logical case. I think, just without, if I take this line here, we are still on a bearish trend, even in the short time frame. So maybe we can come up and test this line, but it would still be a lower high, which would tell me it's still going down further. Where would I be looking for a price entry if I was trading this? Well, I would want this to break through here. I would want it to come back up and retest this line, and then that would be a nice entry to go further short. And again, as you know, with these educational series, I'm just looking at single indicators, not combining multiple, just single indicators to figure out a trading strategy around these. But you want to use your next line above as a stop to get out. And depending on how risk averse you are or how greedy you are, let's just say, whether you want to go with the first or the second line in terms of being able to figure out your take profit zones, or maybe you take proportionate profit zones at each leg. So you could say, okay, well, once I've made my trade in here, I'm shorting, I'm going to take 50% at this line, and maybe you're going to say I'll take 100% or the remaining 50% of that trade at this line. What you're ultimately knowing is you're going to the trading narrative is that it's heading to it's always going to be heading to these lines of consolidation, often referred to as an order block. So nice quick one for you here anyway, nothing too heavy, but as you can see, we are starting to step up the indicators and the strategies around each one of these, and ultimately what we'll get to is a number of different indicators that start to show you the power of combining, whether that's EMAs, whether that's VR VP, whether that's the squeeze momentum, the money flow index, whether it's the Fibonacci retracement tool. All of these are kind of really key to kind of get under your fingertips in order to be able to trade effectively. So let's say nice short one for you guys, and I will speak to you soon.